Like I said, I spent 3.5 years when I first came to the tax mission working for Centrally Assessed. My expertise, so mainly that would be in sand and gravel, non-metal mining, and a little bit in metal mining. I still have a lot to learn about oil and gas and utilities. Centrally Assessed is broken up into the two, utilities and natural resources. This is my house. I take very good care of it. I think it's a very good looking house. If I try to sell my house, this is what the buyer thinks it looks like. They don't think it's worth as much money as I think it's worth. When the buyer goes to the lender doesn't think it's worth very much either. Well, this is what the appraiser thinks of my house. But then at the end of the year, I get this tax bill. This is what Pat thinks my house is worth. All right. Centrally assessed, like we said, we follow the code, section 59.2, 201. All properties which operate as a unit across county lines. That would be fall more into your utility side of centrally assessed. All properties of public utilities, airlines, a lot of our geothermal wells, cross county lines, our railroads, our telecoms. So our utilities, we have a group that does the public utility side. They deal with our air charters, our pipelines, our power companies, our telephone companies. So here we have our airlines. Mainly we deal with Salt Lake International Airport. There is a little bit larger airport down in Washington County. Some counties have small airports that they do have some value to it, but definitely not as much as the Salt Lake International Airport. Pipelines usually cross county lines, usually cross state lines. UNEV pipeline. Pat, you familiar with this one?
Yeah.
Pat's familiar. So what happens when a pipeline comes through your county?
You assess it.
We assess it. We assess the whole. What happens when they're building the pipeline?
Well, there's some personal property of transit equipment.
We usually get a lot of transitory property that comes through. You can see this pipeline was built and it crosses county lines, crosses state lines. And what the public utilities section will do is they value the company as a whole. They value the pipeline as a whole, and then they have to figure out what percentage of that is in the state of Utah and then what percentage is in each county. But like Pat says, when they come in with this pipeline, they come in with just mass transitory property. So if you have a pipeline going through and being built for a couple years, your personal property number is going to skyrocket and you're going to have a lot of new growth. What happens when they leave? Negative new growth. It's kind of an oxymoron kind of a statement. Who takes on that tax burden? Because when you, if you get new growth and your budget and you decide you want to keep that new growth and you want that new money, so now all of a sudden your budget went from $100,000 to $200,000. Well, now you're guaranteed that $200,000 every year from then on out. But all that personal property left, so they're not paying the taxes. Who's paying the taxes now to get that $200,000? The taxpayers. That burden gets shifted to them. So think about that sometimes when you're setting your budget. Do you really need that money? Because did that new growth really constitute more services and more money for your county, for your entity? Because if not, when they leave, your taxpayers are going to be a little upset because your tax rate's going to go up and they're going to pay more in taxes. We also had the Ruby pipeline up in Cache. You guys remember that? And I think we kind of ran into that in Rich a little bit. They had a lot of transitory property and they increased their budget quite a bit. And that tax burden's now been shifted to the taxpayers. But we, in Utah, we are blessed with many different resources. Lots of different oil and gas and natural gas. So I'm just going to go through a couple different things. We have power plants. IPP down in Millard is one of their big players. They did close a power plant down in Carbon, so now that's a lot of value that's taken out of their tax base. Wind farms is becoming very popular, especially on the western side of the state. Anybody know what this is? Cell tower. Telecom. You know, I learned something, you know, went over to the utility section trying to learn a little bit more, and I actually found out, I believe it's FedEx, because they do the FedEx Airlines. And because FedEx was originally an airline service where UPS was originally a ground service, they pick up the FedEx mailboxes as personal property as part of the company, and they have to allocate. When they do their valuation, they come with the value of the whole company, and then they have to break that down for personal property and for each county. And so they have to value and break it down to the mailboxes, where UPS, the county is actually responsible for the personal property of the mailboxes, just because one started as an airline and one didn't. So, I mean, you should get the same value either way. The property should be the same, but just that's why one does it and one doesn't.
Josh, I'd like you to kind of talk to us a little bit about the other side of not taking new growth. If they opt not to take new growth and lower the rate, and then the value goes down, you're headed for truth in taxation to claim the same revenue 4 or 5 years down the road.
Possibly, and that's, I mean, this is my opinion. This is, I think, you're being fiscally responsible by not taking all of that revenue. Like we said, the certified tax rate is going to come out. It's going to spit out a number. It's going to spit out what your budget is for, you know, similar to last year. If you have a lot of new growth, that's going to go up a lot. And do you really need that money? And so we like to think that people are going to be fiscally responsible, and they're going to take less money. That doesn't happen very often. There's a few entities I've seen take less money than they were offered. But what Pat's saying is you're kind of penalized in the future for doing that, is because now you took less money, but in 2 years from now, when you want more money, now you have to go through truth and taxation. So it's a little unfair, like you're being the fiscally responsible one, and now you're kind of being punished for it a little bit. That's how it works at the moment.
And the other part of that is how much it costs for truth and taxation. When you do all of those notices.
It is very expensive, and they actually went around to try and fix that for the calendar year entities last year. Because you were having to do two meetings throughout the year, so they said let's fix that. And so they went through the legislature and they tried to fix it. And when it came around to doing that last fall and going through the process, all these little entities realized how expensive it was going to be to have to send out a specific parcel mailing, and it was going to cost some of these entities like $20,000 to go through truth and taxation. Which means if you want to raise your budget $50,000, well, it's going to cost you $20,000 to do that. So do you add that on top? Or, I mean, it became a problem, and I could see in the future that being fixed because I don't think they realized how big of a problem it was going to be. So hopefully they fix that. But for now, that's how it is. But the utilities also does the railroads, the rail companies, and the rail cars, and they allocate that based on tracks, mileage of tracks in your county. And this is the group of people that you want to talk to. Lucas is the manager. He's been there for quite a while. Art Brownell's been there a long time, and they're very knowledgeable and very good. This group deals a lot with appeals. They deal with a lot of money because you're dealing with those large, the railroad company, Verizon, AT&T, Delta Airlines. I mean, the big airline companies and the power companies. So they deal with large appeals dealing with millions and billions of dollars. And so they spend a lot of their time in court and fighting appeals.
Can you differentiate between rolling stock and centrally assessed? Because you're talking about railroads. But then you're talking about centrally assessed like windmills. Am I just confused on that?
Rolling stock, you're probably better fit to answer. I don't know if I could explain it well enough to
Rolling
articulate.
stock, is the rail cars.
But he's including this in centrally.
I believe Arlene does it. Doesn't Arlene do
They
the?
are centrally assessed, but they're assessed by an individual, separate and apart from the railroad as a.
The railroad is done as a company, and I believe Arlene does the rail cars.
Yes.
She's
Arlene
in
does the
charge.
rail car company.
That's her job. She does the.
And I do the state assessed commercial vehicles. That's the yellows, the Englands, commercial carriers that carry commodities up and down the highway.
Does that answer your question, Craig? So our natural resource side, we deal more with mining, mining claims, anything that has a mineral deposit. Technically, we don't necessarily, when we come up with a value for a mining property, we're really valuing that mineral that's in the ground. So we don't really value that until somebody is actually pulling that mineral out of the ground and selling it, because we don't really know, we're not educated enough or have the expertise to know how much mineral is under the ground and how much it's worth at the time. So we wait until somebody's actually taken it out and sold it, and then we start valuing it. This is a coal plant down in the center of the state. Tar sands is very popular out in Uinta, a couple tar sand companies. Lots of different kinds of oil and gas, different kinds of pumps and wells. Like that's a lot in the Uinta Basin, but we really do have them all over the state. Just who has oil and gas in their county? Carbon does. Uinta, and surprisingly some did. I didn't know that until recently, but they do have a little bit up there past Colville. You drive up, what's the name of that canyon? Chalk Creek, beautiful canyon. You can go up there and they have some oil and gas wells up there. Compressor stations. Oil and gas is just a big industry in and of itself. It's like the only one out of all the centrally assessed where we have to allocate 3 or 4 employees to, because it's such a big industry with so many moving parts. Stone companies, we have, I mean, if you go up, when I was doing non-metals, we had to go visit these sites. Rock quarries, for the most part, are really hard to get to, and they're in the top of mountains, and you don't even know they're there. And you can spend, especially if you go up into Box Elder, you spend a whole day just driving around in the western desert, looking at the most unusual, and you'll pull up into this rock quarry that you didn't know was there, and all of a sudden you'll see 20, I don't know how to say this politically correct, 20 workers that just kind of live up there, and they have trailers, and they just live up there in the mountains and work at this rock quarry all day. But we have a lot of clay in the central part of the state. Geothermal wells are starting to pop up on the western side of our states. Cove Fort, right, there's one right around there. There's one, is it in Millard?
No, it's
Right.
we've got a little bit, a couple of wells, but the plant itself.
Yeah, the plant's in Beaver. And they're actually sending, I believe they're sending the power to California. So they get this hot water and they bring it out, and then they send the energy and the power to California. And Uinta Basin's also blessed with gilsonite and another phosphate that they use in fertilizer, and they're two of the bigger fertilizer producing plants in the world. We have a lot of gypsum in the center of the state. Like I said, phosphate. Potash is really big down in Moab and out in Wendover. Potash is also something that's put into fertilizer, so the state of Utah is very big on fertilizer and producing and helping with that, but potash has actually increased in price, has almost doubled. We have a magnesium plant out in Tooele. And a lot of people are familiar with Kennecott, but there's also gold or copper mines that they leach it out of the ground. Pretty popular down in the western desert. So there's a lot of interesting things. You know, this is a gold mine. You know, you wouldn't think, but there's just the most random things. If you go up into the mountains and the hills, you'll find some really weird, random ways people are doing things. And sand and gravel is pretty common in almost every county. Anyone know what this is? Does anyone realize that we have uranium in our state? Down in the, I got to do the southeast corner. There's uranium. We had actually the only running uranium mill in this country. So everyone was sending their uranium to us, and it was even coming from out of the country. I think the uranium mill's been shut down recently due to the price of uranium. They just weren't making enough money. But this is your natural resource section. Those are your supposed experts, so hopefully they can answer your questions if you have any questions in those areas. Can't guarantee anything, but hopefully they can. So centrally assessed, they reappraise their properties every single year. What's the rule with real property? How often do you reassess it, Pat? What's the law?
Well, every 5 years.
Every 5 years. You revalue it. And so with the centrally assessed, though, because it's an income producing property, we have to relook at that every year. And we require to do that. There's over 1,700 companies, and some of these companies have, I think one taxpayer itself has 2,000 or 3,000 parcels, and we have to value each individual parcel to that taxpayer.
Some of it isn't tied to parcel though, right?
It should be.
I'm thinking of Ruby Pipeline in our county this year where they're saying, oh, we're in this area and we have $54 million there. Well, they're not there.
And when you get in, when you get into you, and that's why when you,
geographic location
yeah.
of it, and Kathleen was saying that they said it's not tied to parcel and that they ask the company for the numbers and it's based on a unitary.
and I think,
The full corporate value or something.
yeah, I think when a lot of people talk centrally assessed properties, you're not, I think, at least for me, it seems like a lot of people are talking natural resource. Utilities is such a different animal, where it's not even like real appraisal. It's not even real assessing or appraisal work, because they're valuing the company. Like they figure out what's the company worth, and then they have to break it down percentage wise of where's what. And a lot of it gets into the intangibles, like a cell phone company, like how much is all that. It's really odd, and I'm trying to learn more about it because it's definitely different. Where natural resources, almost everything should be able to be tied to a parcel or a location.
Yeah, to a physical location.
Does that-
That's what I thought, because the pipeline's
Yeah.
physical, they laid it across the mountains, they ought to know.
But it's underground and is going over thousands of parcels, and it.
They don't know where it gets in Cache County. They told us it ran through a city, I was like, no.
And unless you dig it up, we won't know. So a lot of your sand and gravel companies, and they're going to have parcels that are worth $500. Some of your non-metal mining, they're worth $50. We put the minimum on them. But then you get into your Kennecotts and your oil and gas, and then your utility companies, and they're just worth billions. And it really, those companies can really affect your new growth numbers and the kind of money that you're bringing in. The important dates are, this is how it works, is January 1st, the centrally assessed group will send out returns, or they'll notify their taxpayers that their returns are available online. They need to access them and get them into them by March 1st. Now, when I say return, what we look for is income information, personal property information. What has changed from one year to the next? Have you gotten rid of personal property? Have you gotten new stuff? And what kind of income did you have last year? What did you sell? What expenses did you have? And after all those come in March 1st, we have from March 1st to May 1st to go through all that. So like I said, there's 1,700 companies with, tens of thousands of parcels. Now we have 2 months to go through all that data and to look at their income and decide whether or not we think they're telling us the truth. A lot of the companies, like I said, dealing with sand and gravel and non-metal, some of the smaller companies, they're either trying to trick you or they don't know what they're doing, because they're only making $10,000 or they're taking a $100,000 loss every year. And and you're like, so you're either a really bad business person or you're lying to me. Usually when you're dealing with the larger companies, they're usually a little bit more straightforward and honest. They may try to find loopholes in the tax to try and lower their value, but they're not trying to make up numbers, because they can get audited a lot easier by the IRS and other people. So by May 1st, what we do is have to come up with a value, and then we send it back out to them, usually sometimes before May 1st, to give them a chance to look at it and say, do you agree with this? Did we make any mistakes? Because you're dealing with so much money, we want to make sure that we didn't do something wrong or hit the wrong key on the keypad. So May 1st, their group will send out a final notice. This is your value. This is what it is. Your appeal rights start now, and you have until June 1st or 30 days from when you receive that to appeal that value. And that is their appeal period. It is different than other people's appeal period. So real property, their appeal period is usually later in the year. For centrally assessed, it's from May to June, or 30 days after they receive their notification if there was some kind of delay or something happened in the mail. When they appeal, they can appeal a penalty. They can be assessed a penalty. If they don't file by March 1st, their companies can be assessed a penalty. That may not seem like a big deal, but it's up to 10%. So if you're talking a company that's worth $100 million and 10% of that, that's a lot of money that can come towards the county. So they can appeal that. We've found that the commission is usually pretty lenient in their first year. If it's the first year you were late or filed late, they usually let that go. But if it becomes a habit, they usually stick it to them. So June 1st is usually their appeal period. What happens is usually you guys send out your notices July 22nd. You'll send out your notice of property value. You'll send out this one as well. So they get several notices throughout the year. They get usually a preliminary, they get a final value May 1st, but they wait until they get their notice from you at the end of July, and then they call us up and complaining about their value. And then they also call again in October or November when they get their bill and complain again. And they call us and they, well, why can't we appeal? You know, I can appeal my house. Why can't I appeal this? And we have to explain to them that your appeal period's over. Sorry. There's nothing we can do about it.
So June 1st is the appeal.
30 days after the May 1st or whenever it's mailed out, but June 1st is the date usually, especially with the way mail's usually there within a day or two now. Appraisal 101. Me and Pat sat through many appraisal classes together. And we learned all about cost, income, and sales approach. These are your 3 approaches to value. Pat, which ones do you use in your county? Cost? You use any sales? I think you may not, but with the sales ratio team, our county reps, they go around gathering sales information, don't they?
Not for my commercial.
Not for your commercial, but they would for residential. Wouldn't they? Sales ratio? They send out mailings. The sales ratio team sends out.
You mean the sales information, the deeds?
Yeah. So they try to come up with some sales to make
They
sure
don't gather it, they just send it out and it's mailed back to us.
it's mailed back to you.
Well, it goes to the state, and then the state
Yeah.
sends it to us to enter into our system.
So, but basically, in most appraisal work in the counties, we find that they use the cost and sales. There's a few counties that are getting into income approach with the commercial properties. It's a little bit harder to do. Some counties don't have the staff to do it and the ability to do it. I think Salt Lake gets into it because they have such a large staff.
How do they get their income information?
You have to get it from the taxpayer.
You just raise the value.
So that's what happens. That's what happens with Centrally Assessed is they send us their income information, and so what we do is when you have a natural resource property, you could do the cost approach a little bit, but some of these companies are making so much money that their value is more than the cost. They're more than they're making money, and their property's worth more than just the track hose and tractors and equipment that they have. Their property's worth a lot because you're selling gold or copper or oil and gas. It's worth a lot of money. But the sales comparison approach becomes difficult to use because how often do you see a well pump up for sale? When's the last time you drove past a sand and gravel pit in your county and you saw a for sale sign? That data is just not there. There's no way to come up with comparable sales of Kennecott. It's just not doable. You look like you have a question, Diana.
Just pondering a little.
So what we do is we do what's kind of we do the income approach, but it kind of mixes in the cost approach as well. And we're also given the liberty from the commission to use whatever is necessary to come up with a fair and equitable value. So it says here we use all methods but mainly we use the income approach. Unitary appraisal we talked about with the utilities, that theirs is a little bit different where they actually, when we do natural resources, we try to tie down a specific value for each parcel. But with utilities, we said that's a little bit harder. They almost have to they do a business valuation and then have to break it down, and that's really the only way to do it. A lot of the natural resource companies feel like we're doing a business valuation, but we're really trying to do more of a property valuation. What is that specific property worth and what could it sell for?
I'm sure they've tried to figure it out some way, that you would see what they're claiming on their taxes versus what they're saying it's not worth.
I'd like to see that too.
That's something as somebody that's not in management, that was frustrating for us is we feel like here we have the auditing department on our floor and we can't get any information from them. I mean, they're like, literally 3 cubicles over and we can't get information from them. So basically, we feel like they're lying, and a lot of it comes with experience. Your first year, you're kind of just going through the motions, and you're taking their numbers for what, face value, and you do it. And as you get to know these companies and you get to know the business a little better, you start to learn what expenses are acceptable. Is this normal? Or is this normal lawyer fees? Would a normal company spend this much on lawyer fees? And you start to learn those things, and you start to question, and you call them during that 2-month period where we're looking at their numbers, asking them about that, and if this is a typical expense for the industry. And if we feel like they're not being honest with us, we usually, after the season's over in the summer, we'll set up audits. And we'll go to the company, we'll open up audits, and we can go look at a few years back. Some of it's going to them and just helping them understand the process. Because like I said, for some of these smaller operators, it's not that they're trying to do anything wrong, it's they just don't understand. It's so complicated that we go down, sit down with them saying, this is what we need from you. This isn't an expense, and why. Like, they didn't put a large expense on there on purpose. They just didn't understand that, look, we can't give this to you, and this is why. And so we have to, go through some of those steps.
So the solution would be to audit
Yeah,
if you're really
yeah. I think on the county seat, not to throw them under the bus or anything, but a couple of years ago there was something, they did a little section on the centrally assessed, and I think they were kind of hinting at that centrally assessed companies pick their own values because they're giving us their numbers. So we're relying on their data, and in essence they are picking their own information, and until you become experienced at assessing that company or that industry, you really don't know whether or not that's true or not. Yeah, I mean, it's a lot with all of it. Until you really get to know any of your offices, that first couple of years, sometimes you're just going through the motions, and then until you really learn, it's the same with tax relief and these other things. You start to learn these little nuances where people maybe don't understand, or they're trying to get to the system. But you can see with the unitary appraisal that can be difficult, because here you have this pipeline that comes through, and it's only crossing Utah, maybe right there in the corner and right there. So they have to value that whole pipeline just to get that value right there and figure out what that's worth. So like I said, the utilities is something that is very complicated, and I'm trying to learn more about, because it's definitely a unique area of appraisal, and so is natural resources. Does anybody know what a capitalization rate is? It's a rate of return. And so what we do in January, February, when the companies, the larger corporations in the country, and they start posting their data, and we go online and we try to develop a cap rate for these companies. That for each industry that we have our non-metals, our metals, our oil and gas, our airlines, our telecoms, and all that. Each industry person develops their own cap rate for their own industry. And we go through and we try to pick out companies that are similar to the companies that we have in our state, and use their financial information to come up with a rate of return. What's a normalized rate of return for this industry? And that's that's kind of an area where we have a say on what the value is going to be, because we're picking the companies, but the company's data kind of dictates what that rate is. A normal rate for the state usually hovers around 10%, especially in natural resources. A few years ago, when the economy was down, the rate jumped up in non-metals up to 16%. But this last year, I think they're all between 9 and 11. And that's pretty normal rate of return. And it's actually takes some getting used to, but actually the higher the rate is, the lower your value. Because you have, I wish we had a whiteboard, but anybody heard of IRV? Pat, tell us what IRV is. Income divided by rate equals value. So if you're trying to come up with the value, if we're saying a company has $100,000 and we want to divide it by a rate of return of 10%, at $100,000, if I do the 100,000 divided by 10%, $1 million, right? But if you were to raise that rate to 20%, what happens to the value? The value comes down. So the companies like to see higher rates of return. The counties like to see lower rates, because that means all their centrally assessed properties are going to go up in value most likely. But these are the two methods that are used to value these companies: is a capitalized net revenue and a discounted cash flow. Anybody know what the difference is? Anybody heard of these? You're shaking your head.
It's been a long time. Yeah, just capitalizing the net revenue that you're gonna get your net income off that, turning that into a income number.
Yes. So we do their income. We'll take their income, okay, minus their expenses, and we come up with they had $200,000 in income, $100,000 expenses, so their total income's $100,000. We take that $100,000, and the capital net revenue, what it does is what we take is a 5-year average of the previous 5 years. So if you made over 5 years, you average $100,000, you then divide that by the cap rate. And what there's problems with both methods that I have, is that the capitalized net revenue assumes that you're going to be making that money forever. It's saying, okay, you made this money for the last 5 years, you're going to be making it for, the next 200 years. But we know with commodities and with natural resource properties, sooner or later you're going to run out. The problem is not only do the companies, most of them don't know that, but we don't know that either. A sand and gravel pit, we don't know how, most of the time they don't know how many years it's going to last. And usually if you can get somebody that knows what they're doing, they can put together a discounted cash flow, which then is predicting into the future. So instead of taking the past 5 years, they're now predicting into the future what your values are going to be, what your income's going to be, and what your expenses are going to be. So usually the larger companies can do this. They have the personnel and the accountants to do this and to put together a discounted cash flow. And basically they'll say, like, Kennecott says they're going to end in 2026. We all know that's not going to be true, but they have spreadsheets to prove it. And in like 10 years, they'll say, oh, wait, we found more reserves. We're not going to end for another 10 years. And so that does is that because they're only going for 10 more years, that lowers their value. But it's one of those things where it takes a lot of experience and time to get to understand what these numbers mean, and if that's normal, and whether or not they're telling the truth. But that's just a basic overview. Getting into those, it becomes very complicated, and it's just like the tax rate, where there's like a basic understanding of it, but once you get into the little nuances of all of it, it can get pretty complicated.
The variable that sometimes argue is what is the appropriate cap rate, and sometimes that becomes the basis of appeal, saying that the tax commission's cap rate is too low.
And that usually comes from the larger companies, because they understand the market and they understand the companies that they're familiar with and similar to, and they have a better chance at fighting that. If someone came in that owned a sand and gravel pit, they're going to have a hard time arguing. And it's even hard to come up with a cap rate for a sand and gravel pit, because there's just not publicly traded companies out there producing income information that run sand and gravel pits. But appeals, we talked about their appeal process. So usually they do penalty appeals or valuation appeals. They appeal that to the commission. It goes upstairs. It doesn't come to the property tax division. It goes upstairs to the appeal division. And they're the ones that handle it and decide whether or not your appeal was on time, whether or not to accept the appeal. And then once that's taken care of, it gets sent down to the essentially assessed group. And some of the smaller appeals can be resolved within a year. But the larger appeals take years. And that puts a really interesting turn on your counties, because you don't know what the value is going to be. We had a huge issue with UPP last year when that was resolved. I know Verizon's got appeals out right now for like the last 5 years. Kennecott's, they resolved a big appeal from the landslide, and they had about 4 years worth of appeals, and that was just recently resolved. And that puts a big burden on the tax on the county, because Salt Lake, had to resolve that appeal, and sometimes you may have to pay back money. You may have to pay back a large sum to that taxpayer, and who does that hurt? Hurts the taxpayer, because they now have to make up that extra money that was lost. But what's even ironic about that is that taxpayer that appealed now has to pay additional taxes on their property tax of their house to make up for that.
Knowing that's coming up and it's a large enough appeal, can you withhold money from their distribution to kind of put a reserve in case that happens, or not?
I wouldn't.
No.
I wouldn't, no.
I actually talked to one of our state legislators about sponsoring a bill that would allow us to hold out a portion of the new growth in a reserve in anticipation of centrally assessed appeals. And they were going to
Yeah.
So by the
Yeah.
time these things run their course, we're 6 or 7 years later, and all of a sudden we have to, I mean, it costs our school district $600,000, and county like 175. We got hit with 2 in 1 year.
Yeah.
And I mean, it's a tremendous burden. I mean, we came out of it okay. We killed our school district.
Yeah, and that's, I think, when Pat, going back to your, the problem going forward is that if you have this large new growth and you don't need all that money, if you can find a way, I know every budget's different on how much you can hold in that budget, whether or not the budget has to be spent by the end of the year. But if you can find a way to put some of that money away for an emergency, then you kind of solve both problems, where you were able to take more money, but you were able to put some away for a rainy day, and going forward in the next few years, you still have that higher revenue guaranteed to you.
They generally won't let you hold that much, though. They think.
No, I know every budget has like amounts that you can hold. I'm not that familiar with budgets, but I know that there's different rules depending on the budget.
That's the reason we wanted to approach it from the new growth standpoint, because it is new growth. It's something we haven't experienced before. So to be able to have that, I just think it's the prudent thing to do.
Yeah.
If we do get hit, like Ruby, if we do get hit again, what do we do?
And that's smart. And so but it's smart to go through your BOE and make sure that you're following, the rules, and that you can do that with your budget. But that's it for centrally assessed, unless anybody has any questions. Buff?
If you're assessing the centrally assessed, when they go to appeal, do you appear at court and defend it?
If they appeal the value, the person that came up with the value is responsible most likely for showing up and appealing. And a lot of times we'll try to work with the taxpayer and try to resolve it before it gets to even the commission. Because sometimes maybe it was a paper error, maybe it was a misunderstanding, and maybe they don't understand why their value was that way. So we'll go through and see if we can stipulate and find the right. But if it does go in front of the commission, then we do, we're the ones responsible for showing up.
Does that happen often that it goes to the commission?
Yes. Yes, especially with these larger ones. And then the commission will make a decision. And with these larger ones, and a lot of these appeals that are out several years, and like I said, with the utilities group, this is what they do. They're dealing more with district court. They spend more time with district courts type of stuff than they do the commission, because these large companies have a lot of money. So if the commission doesn't rule in their favor, they're taking it to the next level.
So would we be allowed to be included then on hearing what they say at the commission?
Yeah, you can be included in hearing what they say, and usually we try to involve the counties, especially if it's a large amount of money. But they did pass that new law this last year that you want to go look at the bill and see. But it has certain requirements if the county wants to get involved in the appeal, not just here. If they want to get involved because they disagree, with like the Kennecott case, Kennecott was appealing because they thought their value was too high. The county actually stepped in and wanted to join the process because they thought our value was too low. And so there could be multiple sides to that, but there is new legislation of how and when the county can actually intervene and be a part of the appeal. But we hope that our centrally assessed group is including you, and especially in any large amounts of money, because that can really affect your county.
Sometimes central assessed folks will contact the county because your funds to defend, you don't have the funds to hire a special witness. Independent appraisal, so sometimes the county will join in with some of the money that they.
Yeah, and that happened right before I got here. They used to hire special expert witnesses, and they were spending way too much. These expert witnesses are making $200 or $300 an hour.
So now if the county is concerned about that, they can come.
But don't feel too bad about it, because we went up against Kennecott, who paid lawyers and expert witnesses and spent tens of thousands of dollars, and they just got smashed by 2 new employees that were making $25 an hour. So our group, they try to train them well, and we got some smart people that will go on the stand and can go up against some of these people, because these are unique properties. So even though you get these expert witnesses out there, how many expert people out there really know how to appraise Kennecott or know how to appraise a gas well? Like, our group's doing it year round, and these other people may do it once or twice in their lifetime. So it's our group, we're pretty confident that we can go up against most people.
What is the recourse to collect back taxes on centrally assessed? Can they go after tax sales? Cities?
I know it gets complicated, and that's where you want to make sure you include your county attorney. My only experience with that is with like sand and gravel and non-metal. Like I've had some counties call me and say so-and-so is not paying their property taxes. A lot of those properties are either the land's being leased or they're on government land. So now you can go after the personal property. And if you ever feel like they're a risk to take the property out, you know, maybe they're trying to be, you know, slimy and they're going to hurry and try and take off, you can go contact your county attorney and see if you can go seize that personal property.
So they're like rock quarries and stuff that I can think of right now in my mind that have back taxes.
I believe unless they have land associated with that, you can only go after their personal property.
So there's no way to really.
Someone told me this once, so I don't want to say this is true, and I'll make sure I'm not leading anyone astray. If it's in the same name and they have other property within the state, or in that county, I mean, if somebody owns a rock quarry and they leave, but their home is still there, that's still associated to their name, and you can go after their home. So I mean that might be hard, it might be rare, but that definitely is something to look into.